Hey, everybody, welcome to today's show. So, I think for many of us as entrepreneurs, purchasing equipment can represent opportunity, more capacity, more customers, the ability to scale. But before we finance anything, I think we really need to understand whether that decision is actually going to improve the financial health of our business. So, our guest today is bringing a unique perspective to this because he spent his career on both sides of that equation, analyzing businesses and helping them access capital. Rob Misheloff is the vice president and founder of Smarter Finance USA, an equipment financing firm, and he's helping small and mid-sized businesses secure the capital that they need to grow. So, with a background in financial analysis, business evaluation, and finance, he's bringing the perspective of both an analyst and a lender when he's evaluating our business decisions. Rob, welcome to the show.
Thanks for having me.
Yeah, really excited about today's conversation because I think equipment is it's just a really big discussion point for a lot of businesses. So you have a varied background. So financial analysis, business valuation, lending, and you've talked about your perspective being that before we finance anything, we really need to understand if that decision is going to improve the health of our business. I think that's really smart. But how do we as a business owner really gain that understanding?
So, it's interesting because we talk to, I don't know how many hundred business owners a month that are potentially looking to finance some equipment to grow their business. And I train our salespeople to go through a process with folks because we want to make sure that if someone's going to finance equipment or get involved in a contract, right? They understand what that's going to do for their business in terms of how much, not just how much revenue is that equipment likely to bring in, but how much profit. Because what really matters is not how much dollars you do in sales, it's how much cash flow you bring in to the business. You mentioned the business valuation side. When you're valuing a business, you really the one of the very few things you look at that's important is how much profit is there. Because if someone's going to purchase a business, for example, they're purchasing essentially a future stream of cash flows. And that's very important that you look at that before you purchase anything for your equipment, for your business, whether it's an MRI machine, if you're a doctor's office, or a dump truck, if you're an earth moving company. And we'll talk to folks and say, okay, how much are you going to bring in from this equipment? And they'll say, well, most of them know that. They'll know the revenue side of it. But then we ask, all right, what are the costs involved in operating that equipment so we can get an idea how much cash flow is this business, is this equipment going to generate for you? And that is the number one key. Do you have a plan to generate revenue with this equipment? How much? What are the costs going to be? What's the cash flow? So we can uncover what's the benefit of this investment in your business. And it's pretty important. And I'd say about a third of the folks that we talk to have actually thought about this before they're making the investment.
So for the other, two-thirds, actually, let's talk about both sides of that. So for about a third that have actually thought it through, what are some of the things that they're bringing to you to kind of make that demonstration? Is there a certain reporting? Is there a certain way that you'd like to see that information represented that makes it easier for you to then take that, make that next step to go forward?
Um, no, and the reason for that is we talk to businesses of all types, right? We small construction companies, trucking companies, restaurants, uh, um, medical equipment. And so each type of business is going to be different. And in our business of equipment financing, especially for, we specialize in kind of the smaller side. It's called the small ticket arena. The vast majority of the transactions we're involved in are $250,000 and under. And in the underwriting process, most of the time, we don't look at bank statements or financials or anything of that sort. It's just not needed. So it's more in terms of helping our customers decide, does this make sense? Is this a good, like, we're going to make commission either way if we do the deal, or but that that's not what's important to us. It's important that, well, number one, if we help somebody make good decisions, we can keep them for life as a customer and potentially not do one piece of equipment, but we've got folks that come back to us over and over again. And, where we're doing our 10th transaction. And as a business owner myself, I'll tell you, it's a lot cheaper to keep a customer than it is to go out and get a new customer, right? You're always going to pay a cost of customer acquisition. And in most businesses like mine, typically you're going to spend about $1,000 in marketing to get a customer. So I'd rather spend $100 in marketing for every transaction I do with somebody that I do 10 transactions with than do one transaction and have them not see any real value or differentiator. And every time we do a new transaction, it costs us $1,000 in customer acquisition costs all over again.
So, for the other two-thirds that are coming to you that you say had not really thought through those points that you gave us about understanding if we're improving the financial health of the company. So, maybe we know we're bringing revenue, but we haven't really figured out like what's the cost of running that and, what is it really doing for us? What next steps are you giving them to kind of think their way through that piece?
Well, oftentimes we'll tell them, if you can't quantify what this transaction is going to do for your business profit wise, are you sure that's really what you want to do? Which is really shocking to a lot of the folks on the other end of the phone, right? Because the only thing we should care about is, can we get money out of them? Can we get them to do a deal? Because that's how we get paid. But I think when you think about the customer first, in the long term, it's better off. You're better off, and so is the customer. So that's kind of how we run the business. And our salespeople, they'll talk to folks in 12 different industries in the average week. So it's very difficult to give specific advice on, well, here's what you need to think about. And in fact, it's not really our place beyond saying, hey, let's think about this. Let's help you decide if you're making a good decision or not. It's not our job to talk you into doing financing with us. In fact, if we're talking you into doing financing with us, I think that's kind of sleazy, right? It just is. Is if we have a solution that works for you. Now, if you're thinking about us versus some company that we know isn't a very good company, that's different. But trying to talk somebody into, you need to do this transaction. Well, number one, if that's pretty hard to do if you don't know what their cash flows are going to be. And so if they don't know what their cash flows are going to be, I mean, it's just not going to be a good transaction for anybody.
So, how do you feel timing plays a factor in all of this? Because I think sometimes timing is a big consideration. So, how does a business know if they're really ready to make that investment? What indicators are you looking for, and do you think they should be looking at within their own business that say, yeah, we're ready to take on additional debt responsibility like this?
So it depends on the situation, right? So a lot of times Here's a common call we get is someone's renting equipment. And what you'll see is a company will start renting equipment for one of two reasons. Maybe they just need it for one or two jobs, this specific type of equipment. And then they realize they're using it all the time. And to give you an example, there's certain types of equipment. Let's use like a bobcat, for example, which is used on construction yards and asphalt, all sorts of things everywhere. It's the Swiss Army knife of construction equipment, and you'll see someone will be renting one for it will cost eight or $900 a week to rent one of these things. Whereas typically your typical bobcat, or if it's not made by bobcat, it's known as a skid steer. Um, their payments on it might be $1,000 a month, depending on the price and so forth. But it's four times as much to rent it as it is to make payments on it. And at the end, you own the asset. When you're renting, you don't get anything out of it. So when someone comes to us and they're renting equipment, I mean, it's usually a no-brainer. In fact, a lot of rental companies do what's called an RPO, or a rental with a purchase agreement, where a certain percentage of your rental fees go into an account that if you want to buy that equipment, you can use that as a down payment or a cap reduction. So then it's easy. Other times, folks will come to us and say, "Hey, I've got a contract, and this contract starts in a month, and in order to fulfill this contract, I need X amount of trucks or X amount of machines," and then that's the easy one. Or a company will call us. You know, we did a deal a few years ago where someone's pizza oven broke, and they were out of business until they got another pizza oven because they couldn't make any pizza. So a lot of times, the vast majority of the folks coming to us, they know exactly when they needed the equipment. Usually it's now. Um, and but it really depends too, because that's on this kind of the smaller side of things, which is where we specialize. When you see some of the larger transactions, then it can be a little bit different, and there is some analysis that goes into it. And it really comes down to, well, number one, again, cash flow. Is it going to increase cash flow? How long will it take to start increasing the cash flow? And based on that, is it a good scenario that we're getting into?
Is there anything else that you're looking at? Because I know you touched earlier, you said we're not really paying attention to bank statements or necessarily financials, but here we're saying we are concerned with cash flow, which is part of the financials. But is there
Right.
anything else that you're looking at that maybe a business owner might not realize mattered to you?
Here's the biggest thing, because it's funny, is when I say we don't look at bank statements, that's like usually like the strange thing about equipment, because there's so many different ways to do it, so many different types of equipment, so many like someone coming to us with an established business with decent credit, buying a $200,000 drill rig, let's say, is much different than, say, a startup business with challenged credit buying a $20,000 truck or a $20,000 trailer. And one of the biggest things that we see in when, especially when credit gets a little challenged, that's when we have to start looking at, well, what do the bank statements look like? Does the business have the capacity to pay? And one thing that will kill a deal is a lot of these predatory short-term business loans that you see advertised online. Sometimes they're called a merchant cash advance. and they have egregious terms. They're meant to turn. And what I mean by that is some of them are 90 days, some of them are 180 days. They're made to look inexpensive, just like, you used to see years ago on television, there'd be these commercials where they'd say, you can feed a child in Africa for less than a cup of coffee per day. And you wouldn't realize, well, I've just signed on to pay this $400 a year. Uh, uh, and if I do this for 5 years, I've offered to donate $2,000 that probably doesn't go to any kid in Africa. Um, but that's the way these kind of short term, really icky um, business transactions are made, and it's real smoke and mirrors stuff. And the way you know that is the way that these are marketed. They say, people, there's a high rate of satisfaction because people come back, and the average customer takes 3 to 4 loans from these companies. Well, that's because they have to be paid back so quickly. And if you like calculate the actual interest rate as an APR on some of these things, it'd be like 130%. And so it's just the highway to bankruptcy. And so when we hear that a company has, and there's, a few dozen companies that are well known in the industry, and if someone mentions, well, we've got a loan, or we see on their credit report that they got their credit pulled by, and I'm not going to name the companies, but we know that it might be a challenge to get the deal done, because having a loan from one of these, they're kind of the payday loans of lending, um, puts the company in a precarious situation.
So, in that instance, if you're seeing that there's evidence that an MCA loan might be in place, you're going to dive a little deeper, might ask some more questions, maybe ask about what's the plan to get that paid off so we don't find them in that loop of now they're stacking one MCA loan on top of another and another.
Right. And if they're what's called stacked, like, we're not going to be able to help them because we know
Okay.
that that's the default waiting to happen.
So is that, and I know that it is considered, when you really get to some of the fine print, there is a lot of predatory lending that's out there. And I know that you've spoken before about how important it is to really evaluate what you're being offered. And you mentioned that there's times when what someone might be looking at is legitimate, and other times it's a proposal and it's designed to commit them into something
Yep.
before the real terms of the deal are disclosed. Can you walk us through that and some of the red flags that, as a business owner, would really want to you'd want us to slow down and ask more questions?
Absolutely. So one of the most common scams in the equipment finance industry is what I call the deposit scam. And what happens is you get sent out an approval letter, which is not unique. And the approval letter says you're approved, and this is going to be your payment. And we need your first payment, your last payment, and document fees, which is $500 or $900, whatever. And that's not unique either. That's like almost every transaction has those. Where it gets tricky is, the customer sends these things in, and then they get a call from their sales rep. It says, okay, well, we uh, can't approve you under the terms on that letter. In fact, that letter was just really a proposal. I know it says approval at the top, but you can ignore that. And um, this is what your actual payments are going to be, and there'll be payments that are significantly higher than what was proposed. And of course, the person on the other end of the line gets upset, and then they say, "Well, I'm not going to do the transaction." And the sales rep will say, that's fine, but you'll see you've already sent us money, and on page 2 here in that font you can barely read, and I know you don't have an attorney. It says that if you don't move forward with these lousy terms that were not what I promised you, we've earned that fee, and we're just going to keep your deposit. And this happens every single day. So there's only really two things you can do to avoid something like this. The first is read the contract that you're sent, or read whatever terms are there, which so it can get tricky because like I see these and a lot of times I don't know what they say. They're in lawyer talk and I don't have a law degree. Um, Luckily, um, nowadays you can upload it to like a Claude or a Chat GPT and ask it, does it have anything in here like that? So that's a good way to now that's not a perfect solution, right? Perfect solution is have an attorney look at it, but a lot of folks they don't have an attorney, and it's certainly not one they can just send a little contract to and say read this and make sure I'm okay. Um, in the absence of those two things, you have to rely on online reviews, and if you go to any of the companies that are well known for pulling this kind of stuff and you sort them by the one star reviews and you look at because if you look at one every company has a one star review or five, right? And if the one star reviews are things like, well, they couldn't get me approved, well, that doesn't mean anything because I've never seen somebody write an online review. Well, I had a 300 credit score and had a bankruptcy last week and they couldn't get me approved, right? You're only hearing one side of the story. Or, well, the rate was too high. The rate was too high for what? Is it a startup business with a 500 credit score? Because if they can get financed, the rate's going to be pretty darn high. But if the reviews are um, they took my money, didn't provide financing, and I can't get my money back, that's a company not to ever do business with. If it's they promised me this and then the rate was higher and I couldn't get out of it, and yeah, if you see those kind of things and you see multiple people complaining about the same sort of thing, I mean those are the red flags to really be careful of.
I think that's actually just really insightful because there's so many different things I think that are coming at us in terms of information, and contracts are difficult. I think if we are presented with something and we really don't understand it, it is helpful to have an attorney look, although it can be expensive. So by the time some of these borrowers get to you, what percentage of them are coming through and they've been negatively impacted by something like this?
You know, I can't give you a percentage, but what I can tell you that I can't tell you how many people have reached out to me in the past and said, I wish I would have read your website. One that sticks out, and this was a few years ago, but it still gets me, is it was I call it the $14,000 laptop. Because a lady reached out to me and asked if I knew what to do. Um, yeah, and I ended up referring her to an attorney. I don't know if anything ever came of it, but there's another scam in the industry. It's not as prevalent as it used to be, but I still hear about it sometimes. And it's um, the FMV scam. And so what happens is the again, who knows what these contracts say? It's very difficult if you're not an attorney to read through all this stuff and know what it says. And so your sales rep would tell you, okay, so you're going to make X amount of payments for X amount of years. And after you make the last payment, that's it. You own the equipment. And that is your traditional, it's called an EFA or equipment finance agreement. That's a loan, not a lease. In a fair market value lease, the typical contract will say, okay, so it's really a kind of a rental agreement. And it says, this is a 3-year lease, and within 90 to 100 days of the lease expiration, you have to let us know if you're keeping the equipment or not. And if you're keeping the equipment, you're going to have a residual. And if you don't let us know, we're just going to renew the lease for another year. And so um, a lot of small businesses, they don't have a bookkeeper. They don't really go through their bank statements. They don't catch things. And so what happens is you'll have customers that don't think they paid, just think they paid it off because they're not really looking. And in this case, the woman had seen, she goes, wait a minute, I thought I paid that off 8 years ago. And she looked into it, and it turned out her lease kept getting renewed. And by the time she figured it out, she had made $14,000 in payments on a $2,000 laptop.
That is absolutely shocking. But I can see how something like that would happen, though, because I think we've all at one point or another had a subscription to something or had a contract in place where we couldn't really remember the specifics, if especially if it had been in place for some time.
Oh,
Um,
absolutely.
what do you recommend? I mean, what do you recommend to most businesses in terms of like a cadence to go through and review these if they're on a lease with their equipment? Is there any type of a short action plan that you can recommend to businesses so that they don't find themselves in that situation?
So I'll tell you what I do running this business, and it's a major pain. It is not fun. But every month at the end of the month, and we're a larger business than most of our customers. So we have a lot of transactions. And every month at the end of the month, I download all our bank statements into Excel files, and our credit card statement, and I merge them all, and I sort them, and I sort them by what company they're going to, and I put them into a spreadsheet. And anything that looks weird, I investigate. And it is not fun. And it's something that people have told me, you can outsource this. I said, I don't trust anybody. Is if somebody, every once in a while I'll see in the newspaper, just a local paper. I mean, this doesn't hit the big papers, just my local paper. Um, some office manager is going to jail for 3 years because she embezzled or he embezzled $2 million or $3 million from a company, and by the time they got caught, the company was out of business and everybody there lost their job. And I see articles in the news like that enough to know that as much as it's not fun and as much as it's not a revenue generating exercise, if I don't keep my eyes on the cash flow, somebody could embezzle all our money and we could be out of business.
Okay, so in that instance, you're actually manually going through. You mentioned you're downloading everything, you're sticking it in Excel, you're merging it. So my next question is, are you using any type of technology or AI to help you with that?
I could be, um, but I don't. It's just I've been doing it this way for 20 years, and I'm old and I'm a dinosaur, and I probably should, um, but it's 2 hours once a month. So yeah, could I save a couple hours? Probably, um, but who knows? I could upload it to ChatGPT. I mean, there was an article the other day how ChatGPT, someone was saying, I'm depressed. What should I do? And ChatGPT told that person, maybe you should walk into traffic. So that, you know, who knows what you're going to get with some of these um, online AI stuff. And so, yeah, it's probably smarter to do it that way. Yeah, I'm old.
So I want to ask you a question. With some of the businesses that you have funded, what's happening behind the scenes? So they're acquiring equipment, and what's happening behind the scenes that would separate one from another to where one ends up using that equipment very strategically, but another one might end up overextended? And both appear really great on paper right in front of you.
You know, that that's a pretty good question. sometimes it's just luck, right? That's a big part of business is you make the best decisions you can with the information you can, and you're not always going to be right. The number of times in hindsight I go, boy, that was sure dumb. Um, what would I have done differently? And a lot of times it's, well, was that like X person lied or some weird thing happened? Could you really have predicted these things? And most of the time, the answer is no. Um, so one thing to is just don't get overextended. The It's funny because every couple of days or so, we over the past dozen years have financed roughly 5 or 6 thousand businesses in transactions, and um, sometimes they go bankrupt, and we get bankruptcy notices because we'll be on a creditor list, and most of the time, this is interesting that I notice. Most of the time, I'll get these notices and I'll remember who that company is. And again, we've done like 6,000 of them. And so you say, well, how is that possible? Because oftentimes it's a company where a salesperson made a huge month based on that company because that company over like an 8 week period kept on buying stuff. And when I say kept on buying stuff, like there's one that I keep getting bankruptcy notices for that I remember because we did in 90 days, we must have done $2 million worth of transactions for them. It must have been 12 or 13 separate transactions. And they were doing it because they had a big contract and they needed equipment for that contract. And it was like a construction job, and a lot of times something will happen, and for one reason or another, you don't get paid on time and you can't make your payments, and sometimes it's out of your control. And so, in some sense, if you're that business owner and you say, well, would you do that again? Well, I had a $4 million job. Of course I would. I didn't know it was going to not work out. Right. So, um, I don't know. It's a lot of times you want to say, well, you didn't plan. And what I've seen is a lot of times it's not planning. It's just, I mean, they could have been more conservative. But you see these guys on the news that are becoming trillionaires. They didn't do that by being conservative, right? They had to bet everything. So it really depends on what's your personality type. And some people aren't going to play the conservative side.
Well, I think that's true. I think anytime you're going into business for yourself, you're being conservatively assertive, as I like to call it,
Hmm.
where there's a certain amount of the time that you need to pull the trigger when the numbers line up. And then you're right, the conditions are not always within your control. So I think it's really important that, especially when you're doing something like this, right? If I'm coming to you and I want to finance a piece of equipment, that I thoroughly, like you say, understand my contract, understand the terms, know what I'm on the hook for personally, right? If it's tied to me in any way or I'm PGing it through the business, where my exit points are. And then I've got, as you said early on in the interview, a really good understanding of, is this bringing me revenue? Yes. Is this bringing me profitability? How do I plan on flexing this piece of equipment in my business so that I can ensure that that's happening? And I think that's really, if you're taking those steps, probably one of the bigger things that's going to separate you out. But again, there's always that unknown factor. We can never
Right.
control, control is really an illusion, I think, to some extent, because you can't control every single thing around you. And I agree with you. I think some of it is also just luck. So
Yeah.
Yeah. Rob, thanks for joining us today. It's been a lot of fun having you here and talking about this. Really appreciate all of your insight around the predatory lending practices and how to spot that, actual loan commitment from something that's just a shady proposal designed to trap us into spending money and not being able to get it back. So for everybody listening, would you tell them how can they find you on LinkedIn or connect to you on social media or even get out and find you on your website?
Totally. Yeah. I mean, my I'm easy to find because my last name isn't like Smith or something. There's only like six people in the world, or maybe it's 10, I don't know, but it's not a lot with the last name Misheloff. So if you look up Rob Misheloff, I'll pop right up. I'm on LinkedIn and so forth. And you can find me on our website, which is smarterfinanceusa.com. And yeah, we're always happy to help and help someone find out if something's a good idea for them or not.
Well, thanks so much for being our guest here today. We really appreciate it. And until next time, everybody.